some concepts, and whatever the questions we are including in this series of the session, that all are based on memory based questions. So just practice that and try to give the answer of that all that questions we included here. Okay, so let's start the session. One update also from our side, that is the running batch for the JIB paper, that is MCQs batch, and where you are just going to get 3000 MCQs and 1000 questions of PPB subject, 1000 questions of the AB subject, and 1000 questions of the LREB subject. Okay, and you can subscribe this batch by using the code Y422. With this code you can just avail the maximum discount on this batch. So you can also just purchase this batch and subscribe this batch for getting 3000 MCQs. Okay, the another batch that is also running for the JIB paper, and this is also very mandatory if you are going to clear the examination, that is your revision batch. Okay, so there are two batches that is currently running, that is the first is revision batch and another one that is MCQs batch. And this is very important, you know, where we are going to cover 3000 possible questions, and you will get 1000 possible questions of the PPB, 1000 questions possible questions for the AFB, and 1000 possible questions for the LREB. So all whatever you are going to get in this batch, that all are very important to clear the examination. Okay, another thing, that is you can just subscribe this batch at a very convenient price by using the code, that is Y422. So with the code Y422 you can just subscribe this batch and you will get the maximum discount on the batch. Okay, so now let's start the session. So the first question, that is a bank reconciliation statement is, so tell me the answer of this question. So a bank reconciliation statement is, look, whenever we are talking about a bank reconciliation statement, so that is prepared by the customer. Okay, so a bank reconciliation statement is prepared by the customer. What we understand by the bank reconciliation statement, you know, if we are talking about bank reconciliation statement, it is actually it is basically for checking the bank related transactions. It is basically for checking the banking related transactions are whatever are recorded properly in cash book bank column, and also by bank in their books. Okay, so that is important. So a bank, why we just maintain the bank reconciliation statement, that is because for checking the bank related transactions that are recorded properly in cash book bank column, cash book bank column. Okay, so this is very important to understand, because look, whenever we have to solve the questions related to bank reconciliation statement, what we get in the question, look, we get a cash book balance and we get the passbook balance, and this passbook balance is also understand as a bank statement. Okay, so why we reconcile, that means whatever the mismatch happening between the cash book and passbook balance, we have to recognize that. Okay, so that is the basic purpose of the bank reconciliation statement, and the most important thing, that is it is prepared by the customer. Okay, so one more thing, that is how bank reconciliation statement helps. So it helps to detect errors. It helps to detect errors in recording transactions and determining the exact bank balance as on the specified date. Okay, so this is basically bank reconciliation statement, that is basically the bank column of the cash book and the passbook, that is also known as a bank statement. Okay, and it is prepared by the customer. So that would be your answer. I hope it is clear for everyone. Next question. Just solve this question. This question is from the foreign exchange arithmetic, and where the direct quote available between the US dollar and rupees, and in London market direct quote is available between the euros and dollar. So now you have to tell the value for the euros. Okay, so 1 euro will be equal to what rupees, you have to just determine in this question. So how we can just solve this kind of the question? Just tell me the answer of this question. Look, how I explained you. I explain, whenever you have to solve these kind of the questions in the exam, always just looking for, like, you have to just calculate the value of the euros and rupees, right? You have to calculate the values of the euros and rupees, and you have to determine that. So you know that the $1 that is equal to the 0.7580 euros. So you can also write in this way, that is 0.7580 euros, that is equal to your 1 US dollar. Okay. Meanwhile, this 1 US dollar is also equal to how many rupees? That is 42.850 rupees. So just write here. So we can also write that is 0.7580 euros, and that is equal to your 42.850 rupees. Okay. Now you have to just solve this question and you will get the answer. So how we can just solve this? That is 42.850, and it is divided by the 0.7580, and now you have to calculate and you will get the answer. Just tell me the value of this. So the value that would be 56.53. So the answer that would be the second. Okay. So this would be your answer. So look, whenever you have to solve any question related to your foreign exchange arithmetic, the thing that you have to understand, if you have to find the relationship. So in simplest way, how you can solve these kind of the questions, first understand, that is, you can also write this direct quote, like the quote is available here, 1 US dollar, that is equal to euro 0.7580. So you can also write this 0.7580 euros, and that is equal to your 1 US dollar. This is also can write as written as, okay, and this 1 US dollar can be write as, that is 42.850 rupees. So just write here and just solve this and you will get the answer. Okay. Next question, that is goods sold worth of 30,000 rupees to Mr. A against check issued by him. So the entry for this will be, look, this is very important question. If we here we have to make the debit and credit entry for this transaction. Okay. Here we have to make the debit and credit entry for this transaction. So how we will make the debit and credit entry for this transaction? Whenever, look, what rule you have to follow? The first rule you have to follow, that first you have to just recognize what accounts, or say which possibly accounts can be included in this particular transactions. So suppose that this is you, okay, and this is you, and you are sold good to someone, and that someone name, that is Mr. A. Okay. So you sold, or say you sold, you you just sold out your goods of the 330,000 rupees, and meanwhile this person A just issued a check for you. Okay. So what accounts here possibly included? The first account, that is sale account, that is very obvious to understand, and second account, that would be, because here the term that is used, check. Okay. If the term that is check here used, that means that another account, that would be the bank account. That important. Okay, suppose that the question is like goods sold worth of 30,000 rupees to Mr. A against cash given by the Mr. A. So here the second account, that would be the cash account. Okay, but the thing that is we have to first recognize the first step. Whenever you have to just make the debit and credit entry, the first thing you have to looking for, that which possibly accounts can be included this particular transactions. Okay. So if the goods sold by us, that of the 30,000 rupees, that means the first account, that would be the sale account, and another account, that would be the bank account. Why bank account? Because here the term that is used, the check. Okay. So now now the thing that is sale. If the sale happens in our company, in our organization, in our firm, that means if the sale is happened, that means it is income for us. And if it is income for us, that means what income we keep in which account category? That is nominal account category. Okay. In golden rule of accounting, we just understand, that is whatever the debit, whatever the expenses we have, in nominal account category, what things we keep under the nominal account category, that is income, gains, losses, expenses. Okay, so these things we generally keep under the nominal account category. So now we have to recognize that is sale. This is for our income. This generate our income, and income, that is that comes under the nominal account category. And for the nominal account category, the debit and credit rule says that is debit all the expenses and credit all the income. Okay, while bank account, that is asset for us, isn't it? Bank account, that is asset for us, and asset comes under the real account category. And for the real account category, golden rule of accounting says debit what comes in and credit what goes out. So if the goods sold of 30,000 rupees to Mr. A, again check issued by him, that means the 30,000 rupees just coming into our bank account, isn't it? And if this is coming into a bank account, that means debit. For real account, golden rule of accounting says debit what comes in. So if the debit what comes in, that what that means, just understand. Let me remove all these stuff here. Look, the two possible account that can be included, that is sale account as well as the bank account. And we know that that is sale account generates income for our company, and it will keep under the nominal account category. And this is asset for our company, and it will be a real account category. And for the nominal account category, that says the credit all the incomes, so sale account would be credited, while debit for the bank account, because this is asset and this comes under the real account category. And for the real account category, that is debit what comes in and credit what goes out. So here the 30,000 rupees, just tell me, this 30,000 rupees just coming into our bank account, that means our bank account should be debited while sales account should be credited. That's it. Okay, I hope it is clear for everyone. Okay, so when we are going to just make the entry for the debit and credit entry, so how we will just write here, that is this will be our bank account and to sales account, and bank account would be debit by the 30,000, while sales account should be credited by the 30,000 rupees. So this is how we just make the debit and credit entry. So the answer that is given by everyone here, that is A. Yes, that is it. I hope it is clear for everyone. Now the next question. Next question, that is depreciation starts on the machine from. So you know what we understand by the depreciation. Depreciation, it is basically an accounting method. It is basically accounting method for allocating the cost of tangible asset over its useful life. And it is used to account for declines in value over time. So whenever we are talking about the depreciation, that is, it is a process of deducting total cost of an asset. It is a process of deducting total cost of an asset over its useful life. Okay, so whenever we are talking about the depreciation, that is depreciation. So you know, in the depreciation, the monetary value of an asset decreases over time. So the monetary, whatever the assets we purchase, why we use the depreciation? Look, whenever we are talking about the depreciation, that means the monetary value of an asset, the monetary value of an asset, and it decreases over time due to use of the wear and tear or obsolescence. So the decrease is measured as, whatever the decrease happened, that decrease is known as our depreciation. This is known as depreciation. So depreciation starts on the machine from it is put to use. Okay, understand? I hope it is understandable for everyone. So you know, depreciation, the two purposes of the depreciation, why we just use a depreciation in our accounting or say in our business. Suppose that we just purchase some asset of the, suppose that of the 20 lakh rupees, okay, and if we purchase any asset for the 20 lakh rupees, and we just assume that its useful life 5 years, okay. So after 5 years we just after 5 years we also have to replace this asset with another new asset, and with the, just suppose that with the same amount, okay. So depreciation is a process that you can just replace this fixed asset after its useful life. So this is the first reason why we use a depreciation. The another reason is for the tax purposes. The another reason is for the tax purposes. For the tax benefits, you can like companies, organizations also use the depreciation or say higher depreciation in the initial years. Okay, I hope it is now understandable why we use the depreciation in the accounting. So now just do another question that is based also from the depreciation. Just tell me the answer of this question and how we just solve this question within a minute. Okay, just understand this. Look, in this question, a trader purchased a machinery for the 64,000 rupees. Okay, so that means it is our cost of the asset, or say it is our cost of the machine, that is 64,000 rupees. And depreciation is charged at the rate of 25% by diminishing balance method. So what we understand by the diminishing balance method. In diminishing balance method, how we just solve the depreciation question? Look, understand. That means that every year, whatever the depreciation rate is given, that will be charged on the previous year end value. Okay, that will be charged on the previous year end value. Like I always explain in my lectures, how we just solve the questions of the diminishing balance method. So look, in the depreciation, look, if we are talking about the straight line method, in the straight line method, that depreciation is a constant, that is whatever the depreciation amount for the first year, and that would be same for the every year, like for every useful years, okay. So if you're talking about for the straight line method, and if you're talking about the diminishing balance method, declining balance method, okay, so that is the method in which the depreciation rate applied on the previous year end value, okay. So how we solve this question quickly in the exam, just understand this. And in this question, after that, it is also written that is at the end of the third year, it was sold. It was sold for 24,000 rupees. So what was the profit or loss on the sale of the machine will be? So we have to calculate this. That means we have to calculate the depreciated amount for the third year. Okay. Or say you have to calculate the value of the machine after the third year, and you just sold it for the 24,000 rupees. So you also have to calculate the profit or loss on the sale of the machine. Fine. So look, just understand that if I'm saying that machine just depreciated by 25% in the first year, that means value of the machine after, just understand, that means if the machine is depreciated by 25%, that means value of the machine after first year. So what it will be, that is 64,000 rupees multiplied by the 0.75, or say 75%, whatever you say, okay. So this would be our value of the machine after first year, isn't it? Because depreciation is charged with the 25%. So the value of the machine after first year, that would be your 64,000 multiplied by the 0.75. 0.755, because the 75%, now the value of the machine would be 75%, and this 75% also can be write as a 0.75. Okay. After that, if you are saying that value of the machine after second year, so what will be the value of the machine after second year? What it will be? Look, in diminishing balance method, what we understand, that is depreciation charged on the previous year end value. So now the previous year end value, that is 64,000 into 0.75, right? And now the value of the second year, value of the machine after second year, how we can calculate? Like, now the value of the machine, that would be remain another 0.75, just multiply by the 0.75. Okay, and now we have to calculate the machine value after third year. So how we can write this? That is after third year. So how we can write this? That is 64,000 0.75 0.75 and again multiplied for the third year. That is after at the end of the third year, what will be the machine value? That is another 0.75 should be multiplied here, because in this question the depreciation rate is constant for every year. Okay, look, depreciation rate would be constant for every year, but depreciation, whatever the depreciation rate will be applied, that will be applied on the previous year end value. That's why how we can write like this way. Okay, so in the exam, whenever you have to solve this question, so you only have to just consider like this. Suppose that this is your total cost of the machine and it is 25% depreciated with a diminishing balance method. That means after first year your machine value would be 64,000 multiplied by the 0.75, because you have to calculate for the third year, like at the end of the third year. That means for the third year that would be equal to like this way. Okay, fine. Now this would be your value of the machine after third year. So now you only have to calculate this. Look, 0.75 we can also write this 3 by 4. That is also right as a 3 by 4. And now you have to solve and you will get the value, that is 27,000 rupees. And this is the value of your machine after the third year. And but you sold for the 24,000 rupees. This is your currently value and you sold for the 24,000 rupees. That means it is a profit or loss? Obviously it is a loss. And how much, by what amount? Look, this is your sale amount, that is 24,000 rupees, minus that is your value of the machine, and loss will be of the 3,000 rupees. So that would be your answer. This is how we can just solve this question in the exam very quickly. Okay, I hope it is understandable for everyone. Okay, so that's all for this session. I hope this lecture will be useful for you. Now we will meet on tomorrow at the same time. And if you're liking our effort, please do not forget to hit the like button on this video. If you are not downloaded the Adda 247 application, just download this and subscribe the Officers Adda 247 YouTube channel, so that you can get the notifications of the live lectures as well as the notifications of the important news that is related to your exam. So thanks for watching me here. Thanks for joining me here, and like this video and share this video to your friends so that maximum number of the students can join with us.